You're with the NDTV network. We're in conversation with the architects of the interim budget 2024. An interim budget, but nevertheless, enough content and direction and tone and tenor for what the government has set as priorities for the months ahead. We're very pleased to welcome Tuhin Pandey, Secretary, Department of Investment and Public Asset Management, and Finance Secretary, of course, Mr. Somanathan. Thank you very much for joining us on NDTV. I'm going to get straight to it. Couple of broad questions first. And one is that, if you had to point out an area that is underappreciated in the interim budget, which you'd like to put front and center, I'm throwing the ball in your court.
I don't know whether it's underappreciated or not, but I think this is a budget for the long term, though it's an interim budget.
Yes.
It's a budget which is, in one sense, for a few months, but is actually looking at 2047. So that's a sort of an odd combination. But what it tries to do is to recognize the fact that if we want to achieve what we want to achieve by 2047, then we're running a marathon. In order to run a marathon, you have to be in good health. And therefore, you have to keep your fiscal position sound, and you have to make investments in the right places and do it in the right way. So that, I think, is the focus of the budget.
So I think a positive surprise, for some at least, when it comes to the FY25 fiscal deficit target. Most of the people I spoke to would have been fairly satisfied with 5.3, and here you have a 5.1 number. So just in terms of how you see fiscal management playing out in FY25 and the sanctity of that number, the target that has been set.
See, from a purely legal constitutional perspective, I can't use the word sanctity for a number in an interim budget. However, I think the finance minister expressed confidence that there would be another budget to be presented, which would obviously then, the fact is that this is the confidence that's been reflected in this number. So it is technically an interim budget, but I think the numbers that we have presented are the numbers that we would have presented from a fiscal point of view if it were a full budget. So we expect to adhere to these numbers. They are realistic. Whether it's the revenue estimates for taxes, the non-tax revenue estimates, the expenditure estimates, all of them are such that the target of 5.1% is realistically achievable, barring some grand exogenous event, which, of course, we have had a few of them in the last 5 years. We had COVID first, then we had Ukraine and so on. But barring large exogenous events, these numbers are very realistic.
And, the other way to look at it is you've also learned the art of managing these exogenous events. I'm very quickly going to run through a couple of things with you and then turn to Mr. Pandey. 1 lakh crore for the Innovation Fund, structure, approach, any details at this stage that you can shed light on?
So, I obviously can't share details of something that hasn't been completely crafted. But I will say this, the intention is that we, through one of the public sector financial, this is subject to change. I'm giving you a tentative outline. Through a public sector financial intermediary, to whom the government would provide long-term capital interest-free, we would make available long-term debt capital with concessional rates of interest or even nil rates of interest in certain cases. They would be calibrated to the kind of projects that would need financing. And this would be for projects that are in the private sector. They're intended to be for-profit projects. This is not a research grant. This is for-profit projects of the private sector, but in areas where there are new technologies, where risks are high, where the payoff could take time in coming. A project that is likely to succeed but may have a very long gestation, and where some risks would have to be taken, which would eventually, hopefully, come off, but where the conventional borrowing metrics would not apply, and where conventional equity financing may not be easily available.
Okay. And correct me if I'm getting any of this wrong, but the subsidy under FAME has been cut. The outlay for the PLI scheme for automobiles and auto components has been raised. Is it fair to put those two statements together to see?
There's no connection between the two.
No connection between the two.
The FAME, the subsidy has not been cut. What's already been promised is being paid, and the scheme is coming to an end on March 31st. So what is happening is that pending liabilities which are likely to accrue are being settled.
Okay. Mr. Pandey, if I could turn to you. You said there's a paradigm change in the approach to divestment. And I take it to mean that we have to pay as much attention to investment, to value generation as we have to the idea of divestment. But let me not preempt your words. What do you mean when you say there's a paradigm change?
See, just to give you an example, that my name of my department is Department of Investment and Public Asset Management. We have 61 listed companies. Listed means that we have brought to some extent to disinvestment at some point or the other with some share sale. And we have got also 16 public sector banks and public sector insurance companies, and which includes the LIC, which was listed in 22. Now, you know, what's the value of the shares 3 years back there? It was about 15 lakh crore. Today, it is 58 lakh crores. It's 4 times. So which means that if the investor would have held a share 4 years, for 3 years, he on the average, his thing, I mean, it's different for different companies, but on the average, the government holding would have given that. Now, if we don't really, and it's not an automatic that this whole thing comes about on its own.
Sure.
It involves a whole complex kind of policy making and actions, which fundamentally is related to first the governance and paradigm within the enterprise. I mean, how do you look at shareholders? How do you look at your things, your return on capital employed, your asset turnover ratio, your capex and growth? All sort of factors go into your profitability and your consistent dividend policy that you do and we emphasize. So incentive and disincentive systems, which will actually give that. And coupled with that, we should have a disinvestment strategy, which should not really be just trying to, you know, encash one's wealth without actually unlocking the value into it.
So you're saying grow the value and then potentially unlock the wealth.
Exactly. And then do it in a manner where you are looking at the receipts from whatever we are doing for the budget in a manner which is consistent with the logic of growth, consistent with the logic of effectiveness and efficiency of an enterprise. So suppose if you were to, for an example, suck the dividend out completely out of the profits from an enterprise, it will have no money left for growth. So we have to even temper that. If we have to, you know, disinvest it very, very fast, irrespective of the value, we will be actually, you know, not be unlocking the wealth and, you know, selling it cheap. So these are the considerations and perspectives that has to be brought in. And I think we have learning that, you know, we should be doing an integrated approach, a holistic approach. And so therefore, we are not really targeting a one single number of disinvestment.
Well, you preempted my next question, which was, are you going to tell me what the number is for FY25?
Pardon?
You preempted my question by saying we're not focusing on a single number when it comes to divestment because there's this larger philosophy at play. So no single number in terms of a divestment target?
That's right.
Okay. You know, the other aspect which is related to this is non-tax revenues are an important source of income as well for the government. And here I'm particularly referring to the dividend piece of it. And, you know, that is also related to the performance of some of these public sector enterprises. As you navigate FY25, what are some of the learnings that you're going to bring to bear based on, you know, a somewhat erratic divestment path? Maybe erratic is the wrong word, but, you know, it's been calibrated in divestment path. So are we going to see more of that in FY25 as well?
No, I mean, to one extent, you know, if you have lumpy disinvestments, like strategic disinvestments, then they will be, you know, if they are in, you get the money. If they are not, then you don't get the money, irrespective of the process, because money gets received only when the transaction is complete.
Sure.
You don't get rewarded for the process which you have undergone. Strategic disinvestment transactions are necessarily long because they're like M&A transactions, and they have to undergo a big process of public auction. Now, sort of share sale transactions are relatively more steady, but they quite depend upon, what is the sector doing, how are the things there, what is the value unlocking that we are looking at that particular enterprise. So I think we should really look at it in a more integrated way, like on a total return basis, rather than really having a single number trying to do. As I said, that even the disinvestment and dividend, they are opposite to each other. If the shares had actually been sold by the government, then, we won't get dividends in future.
And that was the context in which I raised it. 11% increase in infrastructure spend. I'm being a bit of a pessimist here, but it seems modest if you look at, the FY24 scorecard.
I would say this, it's with nominal GDP growth of 8.9%. An increase of 11.1% means that for the fifth year running, capital expenditure as a share of GDP, not just as a share of the budget, but as a share of GDP is going to rise. And this comes on top of very large increases for 3 years. So it's 11% on a very high base. And I think that's a very significant number. And budgeting is always a matter of balance and optimization. So we have optimized fiscal consolidation, growth impulses through capital expenditure, and making sure that we keep the economy on a growth path.
Indeed, and that's a delicate balancing act. If you could just flesh out one statement that the finance minister made in her speech, which is average real income having risen by over 50%. Just some context on that statement.
I don't have those figures with me, but as was mentioned in the press conference, I think by the chief economic advisor, it reflects the growth in per capita income over the period of time, real per capita income, net of inflation.
Okay. One thing which you will be warily tracking, which could throw some of your estimates for FY25 off track. Does geopolitical tension and the risk from the world economy top the list?
They do, but I think we have seen even worse times in the last 15 to 18 months, and we have weathered that. And therefore, I'm not, as I said, based on what we know today, these numbers are realistic. It's not, I do not foresee being thrown off very significantly based on the events that have already happened as of today. If there was something else which in January 2020, no one could have predicted COVID. So something of that kind, one doesn't know. Can always happen. And we've had several of those. Hopefully, we have fortunately not had it this financial year, and hopefully we won't have it next financial year. But I think a little bit of shocks is a routine occurrence, and that we are prepared for. What we're not prepared for is large exogenous shocks.
And
moderate shocks, it's part of the game, and one always works to absorb them, and our numbers are made conscious of those possibilities.
Which is, the same question I'm going to pose to you, Mr. Pandey. As you navigate FY25, what is that one thing that you're slightly warily watching? In a very conventional way, one would say, if you're looking to raise money, the market appetite, global appetite is certainly a factor that kicks in, but let me not preempt you. What are you sort of going to warily watch in FY25?
No, I think the prospects of Indian economy are good. Of course, there are always downside risks of what geopolitical events, but I think the way the economy is being managed, I am quite positive on, this paradigm of value creation, capex and growth of enterprises effectively, efficiently, and rewarding the shareholders, both government and non-government.
I'm going to leave it at that, and we look forward to a more detailed deep dive when a full budget is there for us to, go through. Thank you very much for joining us on NDTV.